Thursday, January 13th, 2022, Maneco 64, home of alternative economics and contrarian views. So commodities, we're going to look at commodities today and why they're continuing to point towards currency debasement, not only the US dollar, but all other fiat currencies. And of course, that points to the fact as well that the markets for tangibles or real things, which commodities are indicating that the central bankers are way behind the curve, that they're not reining in the inflation as fast as they should. If anything, they're way behind the curve. And that's what it's telling me. Before I look into commodities, and I'm going to talk about some of the ways that people can participate in this bull market. And again, it's not financial advice. It's just my opinion and what I'm looking to do. The other thing I would say, you need to also, in these uncertain and volatile times, be aware of counterparty risk. Yes, if you're going to play this bull market in ETFs, for example, or even in commodity futures, you need to be aware that your brokers and the banks they hold your funds with could get in trouble. Markets could get volatile and exchanges could close for an hour or two or for a day. I think back in March of 2020, some European countries like Germany and France, they suspended dividends. And I heard from a friend who works in the markets that a big client of his firm lost millions of dollars because he had something called dividend futures. So you need to be careful with that. I still believe that playing the commodities bull market and the debasement of fiat currencies, the best way to do that is to be outside the system with physical gold and silver through stacking. But why not have some exposure to commodities through ETFs or through stocks to get a little bit of leverage? But you need to do your own risk management, I would say. So one thing I ask you to do is to try to share my videos. I don't charge anyone here for these ideas. I don't have a newsletter where you have to pay every month, but it would be good if you could, share my videos far and wide. And not just for helping people play the commodities bull market, but also to inform people about the real purpose, the major purpose of my channel, to inform them about the fraudulent and fragile nature of our monetary system and the fact that central banking has no place in a free market and a free society. So with that, let's start and look at commodities. So I've been looking at commodities fairly closely for over a year or so, or maybe just a year. I made a video in February last year with Rafi Faber, an interview, and it was entitled The Nascent Commodity Bull Market. And I made a few videos in April and May last year when we saw lumber go up a lot. One of them was on April 27th, and it was entitled Commodity Melt Up, pointing to continued fiat currency debasement. And why is that? Well, because the major fiat currency, of course, is the US dollar still. It's the major reserve currency. And when the dollar buys less commodities or commodity prices go up, it means that the dollar is getting debased. The monetary policy is too loose. The Federal Reserve is keeping rates too low, is printing too much money or creating too much reserves through QE. So that's what it means. And again, I think the dollar index, for example, yes, that measures fiat currencies against each other. And I've said this before, that fiat currencies, they are all sinking. So in the end of the day, hedging dollar weakness with the euro or other currencies, I think in the longer term is a losing proposition, and vice versa. I think the best place to be, and I think this could be, as I've said before, a blow off top or a crack up boom, is to be in real things. So we're going to look at the CRB index, and then we're going to look at some ETFs that I think could be interesting for people who want to participate in this commodity bull market that I think we have been under. So let's look at the CRB index chart, and we're going back quite far here into the mid to late 90s, but you can see that the last great bull market in the CRB index started around 2002, and it topped in 2008, around 468, and that's when gold pretty much went from $250 to just over 1,000 in 2008, March of 2008. And then there was a big correction in the CRB index, as you can see here, during the great financial crisis. And gold as well went from 1,000 to just under 700 during that period. And then the CRB index picked up, but it never made a new high. And that was in 2011, while gold went up to 1921. So yes, gold and the general commodities and silver, sometimes they don't, how can I say, trade in tandem. And in this case, the commodities underperformed. Right now, in the last year or so, or a year and a half or so, commodities have outperformed gold and silver. And that's what we need to keep in mind as well, because I think gold and silver could outperform the general commodities very soon. Does that mean you shouldn't be in them? No, because I think they're going to outperform paper assets as well, the general commodities. So, and even now, as you can see, even though we've just made a new recent high, we've just gone through last year's high here early in the year, we're still way below that high from 2008. So there's still a lot of room for the general commodities, as you can see. What are some ways of playing the commodities market? Well, there's quite a few ways. The most obvious way is to open a futures account with a broker and trade agricultural, base metals, but I would say you would need to be a market professional, and that would be a full-time business or job. And the thing about playing futures, the futures market, and I was a futures and options broker for 20 years, is that it's highly leveraged. So yes, it works or it entices you into the greed part of investing or speculating, and it's very dangerous. But some of you might want to do that. It's up to you. But there are safer ways, I would say, I guess, than playing the futures market, than opening an account with a futures or commodities broker, and that's through ETFs, of course. And there are a couple that I found here, and I'm sure there are a lot more other ETFs, but these are the ones I found, and they are the Invesco. One of them is called the DB Agricultural Fund. It's DBA is the ticker, Invesco. And yes, it says the Invesco DB Agriculture Fund seeks to track changes, whether positive or negative, in the level of the DBIQ Diversified Agriculture Index excess return, plus the interest income from the fund's holdings of primarily U.S. Treasury securities and money market income less funds expenses. So let's see what's in their portfolio. So they've got here their holdings, 13% soybeans, 12.68% corn, 12.63% coffee. They got 12.18 wheat. So you get the idea. These are soft agricultural commodities. And then there's the Invesco DBB, or the DB Base Metals Fund. And this is the details here, product details. The Invesco DB Base Metal Fund seeks to track changes, whether positive or negative, in the level of the DBIQ Optimum Yield Industrial Metals Index excess return, plus the interest income from the fund's holdings of primarily U.S. Treasury securities and money market income less funds expenses. So let's look at the portfolio. So they've got aluminum or aluminum, copper, and zinc. So not much else. They don't have other base metals. So those are the two that came to mind. You might want to look for some more. I'm sure there are other ETFs that are based on commodities. You just have to Google and look for it. The other two things that I've done recently, because I do have mining stocks, gold and silver mining, and for that, I recommend if you're looking to invest in individual gold and silver miners, look into the GDX and GDXJ, those ETFs, and go into their prospectus and look at their major holdings or all their holdings, and try to pick some companies from there. Try to pick maybe a big cap, mid cap, small cap, mix it up. That's what I did in the past. I go into prospectus, maybe a Sprott Precious Metals Fund, go into that and look at what stocks they hold, or just buy the ETF. But the other idea I've had about, how can I say, being exposed to the commodities is through a couple of stocks here. And these are more like in the base metals. And one company is called Vale, or in English you'd pronounce it Vale, V-A-L-E, but I know it's Vale because it's a Brazilian company, and it means valley. And it's one of the biggest commodity producers in the world. Vale SA is a Brazilian multinational corporation engaged in metals and mining, and one of the largest logistics operator in Brazil. I've personally invested in this company, and the interesting thing about this company is that they're paying a very high dividend, 17.37%. Of course, that's not guaranteed that they'll keep paying this dividend. So I think that is a good way to play the commodities market. The other company that I've invested in is called Freeport-McMoRan. FCX is the ticker. They're the world's largest producer of molybdenum and one of the largest producers of copper. So you would have exposure to copper. It says here in 2019, 79% of its revenues were from copper, 11% from gold, 8% from molybdenum. So I thought that Freeport would be a good company to be exposed to. Their dividend is not as high. I think it's just under 1%, or at 0.66%. So yes, hopefully that's helped you. And as I said, this is just my opinion. This is just what I'm doing. I recommend you do your own homework and maybe find other ways to participate in the commodities bull market. So with that, let's quickly look at where the markets are this morning. It's 10 past 9 a.m. London time. So gold yesterday traded up to almost 1830. We got up to a high of 1828. Right now, we've come off a little bit. Overnight, we're at $18.19, down about $6.50. We're right near the lows, and the high has been $18.28. Silver also is coming off a little bit here. We're at 23.09, down about 6. The high's been 23.24 and the low 23.05. To the stock market, the Dow futures down 45, the Nasdaq futures down 20, S&P is down about 6, the FTSE is down about 5 points. To the currencies, the pound is up 0.2% at 137.27. The euro is up 0.2 as well at 114.63. The dollar is down slightly versus the yen at 114.56. And the dollar is unchanged versus the yuan at 636.64. Aussie dollar is up 0.2 at just below 73. And the US dollar is down about 0.2 versus the Canadian 124.88. The Kiwi dollar is up 0.25% at 68.70. To the commodities, to the general commodities here, we've got crude oil unchanged, trading at $82. High-grade copper is down about 7/8% at $4.53. And natural gas yesterday, U.S. natural gas, had a big day. I think it was up almost 10%. Right now it's down about 2% at $4.50. To finish off, just a quick look at the 10-year yield. Well, that's up about 3 basis points at 1.76%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.